Hi, Sanjeev here. If you're someone not sure how to invest in property, what to look for, how the journey will unfold, is there the right time? This video is getting recorded in 2025 January, and you're not sure if you keep investing for 3-4 years, invest in a couple of properties, how the journey will unfold, not sure about anything, then probably I would say watch this video. A lot of my colleagues at workplace asked me during my investment, why you invest in Lithgow? Who lives there? Hey, it's cheap, right? The vacancy rate has been always lower, so there is demand and the proximity to Sydney. And now fast forward, these properties are like 600 plus, and people say, oh my god, now should I buy for 600 plus in Lithgow? I've been investing in regional good 10 plus years, and still I get the same question, will regional grow, right? In this video I'm gonna show you everything, detailed number, how the prospect will look like in the future. Again, none of these is a financial advice. Please seek your own advice from your experts, but yeah, I'm sure this video will be very educational and full of a lot of insights in terms of everything you can think of a property. Because in this one I'm sharing one of our client case study, how they bought 4 properties over last 5 years. They started their journey in 2019, just before COVID, and then how over the time they bought 4 properties and how their journey looks like so far. And everything I'm going to share, like the real property address, everything, what sort of properties, location wise, how they have done, even the backstory. Of course, I work as a buyer agent. I'm going to share, how the deals comes, how we operate. So you're going to learn a lot about behind the scenes also. So get tuned. Let's start. Now, I will start here with the first property. So this is our client based in Sydney, both IT professionals. They have 2 kids and busy professional. Initially they were like, Sanjeev, help us, guide us, like everyone, not sure how the property journey will unfold, right? But they trusted that investment works, and they said, guide us through, and the journey started. So this was like back in 2019 when actually I started my business. So they were like one of my initial clients as well. So this property we bought in Lithgow actually. So where is Lithgow? In Southwell, around 150 kilometers from Sydney, and bought this property in the center of Lithgow, 34 Lithgow Street, Lithgow. You can go and check out the property. It's a 3-bedroom, 1 bath. As you can see, the property looks neat and clean, but of course we did a renovation after buying the property. If you look, the first property we bought was in Lithgow. So this is, of course, we bought it for 340, and this was after renovation. Actually, the client invested $30,000. Of course, before COVID, renovation was much cheaper compared to today market. Now, this was after renovation, double brick, solid home, 340, right? And of course, the client invested $30,000, say, which makes it 370K. But then for 370K, can you build this house? And look, this is the kitchen and living area. They had like carpet, this and that. They removed the old carpet and then did, some flooring, sand and polish. There was some renovation to the bathroom as well. This and of course kitchen. And look at the location, literally in the center of the town. You can see like literally, across the road you have Woolies, shopping centers and everything. Now this property, of course, when we bought it, we got it like I would say around 30,000-40,000 under market value, because market was slightly softer, I would say, back in 2019, and there were not many buyers, right? But that's where, I think they were looking for around close to 400, but because the property has required some work, so we got a good under market value, right? That was one thing. And then of course the client has spent $30,000, and now this property, fast forward back in 2025 January, we're talking about a little over 5 years, this property is worth 600K at least. Now that means, just do the number, 200K plus. Of course the client invested, they did the renovation, $30,000, and then they bought it with 10%, because with the 340K purchase, LMI is not huge, right? So they paid the LMI, they got the deal done, and now it's currently renting for around 480. The rents are like slightly over 500, but I think they had the tenant for a long time. So first property. Now, Lithgow regional, what? I had few properties in Lithgow, and a lot of my colleagues at workplace asked me during my investment, why you invest in Lithgow? Who lives there? Hey, it's cheap, right? The vacancy rate has been always lower, so there is demand and the proximity to Sydney. And now, fast forward, these properties are like 600 plus, and people say, oh my god, now should I buy for 600 plus in Lithgow? Decide on, right? So now, after this property, these guys, they seen the result, and of course, see, pre-COVID market was not as crazy as what we have seen in last 5 years. So our strategy was to add value so that you can manufacture equity, and getting the tradies and everything was much easier back in those days compared to today, right? So that was the strategy, so that they can now manufacture the equity. Down the line they can take out the equity, move to the next one. So that's the result, right? Now after that they have we bought their second investment property. This is in Bundaberg. So this was back in 2021 August, right? Exactly after a year, pretty much during after COVID, right? So 19, and then they took a break for a year, 2 years actually. So in 21, we bought this property again for 340 in Bundaberg. You can pretty much see ocean, right? Like little over a kilometer. It's again a 3 bedroom, 1 bath in Innis Park, beautiful suburb. Again, 3 bedroom, owner occupied product, 1 bathroom, nothing fancy, but good solid home. Now, this property, fast forward after like say 21, we bought it. So, after 3 years, this property is worth close to 600K for a 340. And this property is currently renting for $600 per week. Now, a lot of people say, really? And if you see the history of this area, right? Like, look, someone bought back in 2008 for 275, and after 13 years, we bought it for 340. And people say, oh, a regional doesn't grow. Yeah, depending on where you're buying and what timing, and there's a lot of factors, right? But now look at estimate is 590, right? And high range is 650. And this property, they didn't do anything. Now, while thinking, this property came, now a bit of a backstory on this one. We had already started buying in Bundaberg quite early, of course, back in 21. Actually, we started maybe end of 20 or something, but 21 definitely we were buying there. And this, by the time October, market was already hot. And we were looking at properties every day. We know people calling the agent, looking online, all those things happening, and we know the pockets, know the kind of properties looking for. This property literally came online, I think, that time. And we saw it literally in the morning because it came late night, and try to understand the fastness of the market, right? We have to act sometime. Literally in the morning, our team member called the agent, said, hey, can you share the video? We booked in. Luckily, the agent was going to the property. We immediately book a Zoom call, have the inspection done virtual, and we got the property video, and we liked everything, and the numbers was perfectly awesome. Now, the agent was already selling its under market, and what happens in the moving market, a lot of the time, especially in the beginning of moving market, a lot of the agents don't know that market has already moved, and they themselves underquote property sometime. And it's a common thing you will see many times, right? In many markets. So we saw it, and and the agent was desperate to sell because the seller were keen, and they said, you know what, we're closing this offer 4 o'clock, same day. Can you think? Property came late night. We didn't even see. In the morning, saw. And then we got everything packaged up. The property was good. Deal was looking good. And then they wanted to close it fast. So I had to call this client because I know they are our repeat client and they will move fast because we have already built the trust. Sometimes, we tell our client, like especially who are working first time with us, sometimes we'll not show them this kind of property because when we try to show them like, hey, you have to make a decision in our 30 minutes, it's too much of a push, right? So because even they have already trusted us, they are our client as a first time purchase, but it should not look like a bit of a tactics or anything, right? So we never show to a client who has just signed up, so that now we're giving them breathing time. But for repeat clients, we know they know our process, they know what we're talking about. The trust has been already built because they're buying the second, third property. So this was the second. I called the client around like 11 o'clock, even while we are preparing all the information that I have got a good property I would like to present. And then guess what, him and his wife, they jumped around 12:30. They were both working from office. They jumped on the Zoom call. We had a quick presentation for, I say, like 45 minutes, and then the session chief agree, whatever, looks all good, go ahead. And guess what, we were able to close the deal 4 o'clock that day. Now fast forward, this property $600 rent, right? Like crazy. And close to 600, probably 580, I'll be very conservative to say, and it should change. But check out Great location, Bundaberg, very hot, right? Now, first property was regional, second property regional. Now people will saying, hey, now these are gone. But guess what? Even back in 21, people are nervous. They're concerned. Why regional? Why property? Why it grow? But we'll talk more as we go along with this video. Hope you're enjoying this video. If you're getting value, please subscribe, hit the like button. Let's get into the third day. Now, same year, then in next year, actually, they bought two properties actually. So we bought one in 2019, one in 2021, and then third and fourth property was purchased in 2022. Now, third property, we got it for 325 in Rockhampton. Now, this property, if you see, someone has sold back in 2018 for 180. Of course, these guys bought it and then renovated the full property, right? As you can see, very beautifully done. A full good renovation. Even the roof they had was replaced or they had done. Everything was like inside solid. You can see the around properties where the roof were rusted, right? So again, look at those things as well when you're buying property, because replacing a roof can be pretty expensive. So as you can see inside, everything was done highly good, renovated, good price. I think they were for the owner occupied and they had to sell the property for some reason, and we got it. Now same thing, this property I think is renting for around 500. Actually it's 550 mark, and price wise I would say this will comfortably sell 500 plus. So just do the numbers. Again, good land size, good properties. All these are a hot location right now. You'll be wondering, oh, I should have bought in Rockhampton, Bundaberg back in those days. But that's the power of property, right? And guess what? I would say, see, if you didn't know what you didn't know that time, you didn't have money, then why to worry, right? Why regret? But if you're thinking and didn't took action, then see how this opportunity cost can cost you, right? So these are big opportunity costs if someone has not taken action. And then the fourth property they bought is in Perth, right? Of course, so this property we bought it a big 4-bedroom double brick homes, right? Perth, solid homes. Now look at, we bought it for 468 in September 2022, and I think it's renting for around 650. And the current value would be like around 750 mark. I think the domain is showing around 780, but I think that's a bit on the high side, but maybe, and location wise, literally a kilometer from the beach. And this is Port Kennedy, Rockingham. Check out, right? And all are like good properties, all houses, good land size. I will like go back again, first property in the center of the town of Lithgow, like good land size, 500. Actually can run as a business also, after the subject to council approval and all. Second property in Innis Park in Bundaberg, coastal near the beach, and then Rockhampton. And fourth property in Port Kennedy, so in Perth. So now, so yeah, so of course you can see the three properties were regional. One was of course capital city, but guess what? Until only in 2022, market started picking up, and people who bought that time, and still Perth is going strong, right? Back right now we are in 2025, and still we are buying. So good location, but of course the price point has gone up, like good 50, 60, even double a few properties, right? So I think understand, and that's where it's important that you learn the fundamentals of property, understand, and not just go with the media or the noise, the property prices falling, or this gonna happen, that gonna happen. So these are real deals, right? Just go check out, I think. And now what I'll do is I'll jump into the spreadsheet to show that how the numbers work, what it means. Okay, owning 4 property, all good, but Sanjeev, how that it adds to my wealth? How that the money work, right? How much I'm negative gearing, how much I'm positive, how much capital? Let's dig into the number, right? So I'll get into the spreadsheet. So let's get inside. So now this is the portfolio tracker we use for our clients to track their property portfolio. So if you see the first property, right, we bought in Lithgow, New South Wales for 340K, and of course they invested the cash around 100K, 10% deposit, LMI, 30,000 towards the renovation as well, and then buyer agent fee, of course, because they availed our service, stamp duty and everything, right? So around 100K. Now that property, if you see, they had got a loan of around 300K, and just doing the numbers based on the interest only for this client, and I'll talk about why interest only and those things, right? So say 6.7, the rent is around 480 for this property, council fee, insurance, some accounting, And then you see, we're only calculating 50 weeks because, there's always something with the property vacancy or some tenants moving, or at least in the current environment, none of this property are vacant. So it helps with any maintenance. So there's a little bit of buffer there, right? So that's the property. And then they bought the second property in Bundaberg. So again, we bought it for 340. Cash invested was around 65,000. They paid 10% deposit, LMI, stamp duty, buyer agent fee, all those things, and the market value is around 580 and current rent is $600 per week. Similarly, for the third property in Rockhampton, we bought it for 325. Market value is around 560, conservative, something like that. And then cash investors was again 10% LMI. As you can see, with this, a lot of properties, because they're lower, around 300 mark back in those days. Now these property are sitting around 550, 600, right? So that's what you have to understand, that now to buy similar property in good location like this, you can't buy anymore for 300. And even you can buy, can't be this, because they are 600 now. So rental is good, and everything, 550. Similarly, the fourth property, you can see, so this time, they bought it for 468, and they put 20% deposit actually, because this time, they took out some equity from the second property from Bundaberg. You can see they took out around 100,000 in equity from the property, which they invested. So fourth property, they didn't have to save enough from their pocket, right? And then they were to buy the property, and now it's renting around 650, right? So the four properties. And now if you go into the real numbers, right? So now to give a bit of a backstory about this client, so their goal was to buy properties because they wanted to move back to India, so support their family, stay closer to their parents, but at the same time they wanted to build their property portfolio here in Australia, so that in case they have to come back after a few years, or the kids have to come back, or even doesn't come back, they have got their wealth working for them. And being Australia such a beautiful country, and good for investment, right? And which you're gonna see now, which probably would have understood by now, right? So now if you see, the total market value for these properties right now is around 2.5 mil. Now, the total debt they have, the loan right now is 1.355. Of course, they have not paid any debt. And if you see, the weekly rent is around 2,280 per week out of these four properties. Now, the total cash they invested is 350 from their pocket for the four properties over the time, right? Now, many people say, okay, over this 4-5 years, I can invest that money. That cash, 350, the equity position is 1,135,000. What does it mean? That 350 they invested in last 5 years over this, and then, has already tripled in value. Their investment, cash on cash return, is 300%. They have already tripled their money. Now, ask yourself, where do you get this kind of return? Now, because of the leverage money right now. And of course, they have available equity at around 80%. They can still go and take out the equity and invest another 600K. But of course, they have moved back to India last year because that was their goal, right? They moved back, but then the property is working for them. And that's why they have converted those before going into interest only. Now, with all this interest only, right? I think one of the properties is PNI, because I think they planned it well. It was not a one-day planning or something like that, right? So they have been working last 5 years, but then they have been for a long time to go back, and they wanted to do it, but of course they didn't know how to do it, so they partnered with us. They trusted us, right? And they trusted the process and the property because it was their decision to invest. Now, currently their property is around 4,265 negative cash flow in a year. Now, of course, they have kept more than enough buffer before they gone back. $4,000, but even at 6%, their portfolio will be around 150K in value next year. Just at 6% capital growth. So in this one, we have on the top, actually we have set capital growth average 6%. Now, 6 to 7%, that's generally the trend over long term in the past. Of course, our clients have done really well. They have gone 30, 40, 50% capital growth, right? But that's not the expectation. But if it happens, good, take it, right? But 6%, and even though we have set up, what if the buffer, rate of interest goes up or something like that. So all these are already placed in this. So the current portfolio is around 2.5 mil. Now, if you look at this, even they don't invest, they don't come back to Australia, they leave the property like this. In 10 years time, this property portfolio at 6%, which is very conservative, because all this location, I'll tell you, go check out. They are not stopping, they're growing. In 10 years time, their portfolio is going to be 4.5 million. That's another $2 million in their pocket or added to their wealth. Now, of course, you'll be saying, oh, $5,000, $4,000. But you know what? Even the rate of interest doesn't drop this year. Rents are going up. And even, a little bit here and there, this portfolio will be neutral. And nothing happens. What if? In 2 years time, it will be neutral because rents are going up. Nobody can stop that. So we have a housing crisis. We need more homes. It's basic economics, right? We don't have to be a rock star or, scientist or something to understand that. So it's simple maths. Now, you see the current rent they're getting is around 2,280. Now, the rents will go at like 5%, we have put it. When it becomes 2,500, it'll be neutral property. Even the rate of interest doesn't drop. Now, if you see fast forward back in 35, after 10 years, the same property would be renting for, because let's go assume that their interest only, they're not paying anything. And that's what they're doing, right? After 10 years, the same property will be renting $3,700, which means $1,500 more than today market. Now, think about it. Even the rate of interest doesn't change for next 10 years. After 10 years, you will have $1,500 per month cash flow per week. That's a good 70,000, 75,000 passive income plus portfolio of 4.5 million. Now, yes, the debt they have is right now is 1.3. So if you remove, still they have got a 3 million equity. If I even, minus 4.459 or to 1.3, it's more than $3 million. And now guess what? 6% of capital growth is very conservative. Yeah. So hope that gives you context, right? Should you invest in regional? Yes or no? Will these properties grow in value? You know what? Inflation is not waiting for us. It's doing its job. It's actively working. So if you're not investing money, it's eroding. It's devaluing. So look at it's property game. Hope this helps you, right? And then, you know what? For people who fear, what if the rate of interest goes up? Look at the numbers, right? This one, we have put at a buffer interest repayments of 7%. Now, let's assume this year rate of interest goes up. Make it 7%. Now, their portfolio will be around 8,300 negative. Now you'll be saying, oh my God, 8,000 negative. But look at, they're making 150K every year just holding this property. So at a conservative rate. So even you lose 8,000, I'll give you $10,000. Man, you're making 150K in capital growth. All you need is cash reserve. So support. And at the same time, rents are also going up. So hope you got good understanding. Now, a lot of people might be thinking, Sanjeev, this was a couple of years back. Now this property doesn't exist. Now we have to invest with a higher deposit. I get that. Yes, you're right. And the properties will, right now would be negative gearing with a decent amount because rate of interest is high, property price has gone up. But guess what? Same problems people are thinking like 4-5 years ago, 10 years ago when I started investing, that dilemma always has been there in the property world, right? So all you have to see is like, hey, what is the current situation, how much you can invest and start there. Yes, the price point has gone up, but that's the new starting point. We can't go back in time. So that's where it is. And if you're thinking about regional or anything, I think in the other video, I'm going to talk about where the market will be. Now we're thinking is looking forecasted in 2025 in capital cities, regional. So I think regionals are safer, smaller amount to start with. I mean, you can see now they're no more smaller, has gone over 500,000 already. So I think that's, and in case you're looking for help or are not sure, then feel free to reach out. At the same time, if you want to see some other videos, let me know in the comment section. Happy to do other videos. Keep investing, make your money work harder for yourself and invest wisely. Thank you for watching this video. Hope you got a lot of insight and value from this video. If you like this video, the content, if it is helping you, it's informative, subscribe, hit the like button. I'll see you in the next video.